Welcome to Markets Now. I'm Michelle Rook along with Dwayne Bussey with Bolt Marketing. We're seeing a little bit of firmness over in the grains with the exception of a few of the corn contracts. Over in the livestock, cattle are seeing just a little bit of firmness this morning, hogs in the red. Dwayne, grain market trying to hold together here this morning. We've had at least a 50% retracement in both corn and soybeans in the new crop categories. Have we taken too much weather premium out of the markets?
I don't know when it comes to the corn market if we have yet, but I do think it's a good time to find a little support, mainly because, well, like you said, we've dropped unbelievably hard here in a short amount of time. Not oversold yet, but the biggest reason is we've got a huge USDA report tomorrow at 11 o'clock. So it would be a good time, end of the month, end of the quarter as well, to just square up positions a little bit, maybe chop around a little bit, get that USDA report out of the way tomorrow. And then obviously look at the weather forecast. We're predicting, good solid rains through Illinois that should start later this afternoon, actually, even and be rolling tomorrow and through the weekend. So we'll go right back to trading weather after that. But, considering the huge pullback we've had, this is a good area to pause. But if those rains are realized, which I know is a big if, I think we grind lower in D's corn.
Yeah, so we are trading a forecast. We're not trading actual rain that has fallen here. And even if it does fall, Dwayne, how much yield damage have we done early in the season here? How much can that rain help?
That is the ultimate question. We're talking about a little over an inch. Some areas, like always with thunderstorms, they could get up to 3 inches in Illinois. But really, almost the entire state of Illinois is about 3 inches behind. They would take a good 3-inch rain just to get back out of this drought condition. But like you said, they didn't have rain during an important time frame in a corn stage development where it sets ear girth, ear size. So my thoughts are, to try to answer your question, is we've done some irreversible damage to the Illinois crop. But my fear is that these rains come through, the crop looks much better. It's a dark green color. The roots go down, hit more fertilizer. Crop conditions improve. The report improves moving forward. And we don't know that ear size and how much yield loss until we start doing the crop tours and maybe USDA reports like, honestly, December, January timeframe. It's just Illinois might come in lower than anticipated. But remember, what they have a 210 for a yield last year. So I don't know if we're talking 10, 15, 20 bushels an acre off that state. It very well could be.
Yeah, it's hard to know at this point, as you say. We've sold off this hard as well. You mentioned the reports coming up. So the average trade guesses on acreage anyways are not that much from what we saw in the March intentions, not much difference. So since we've sold off so much, what do we have to have in the report tomorrow on acreage or even quarterly stocks to move this market?
I think to really move this market and to save the bulls, it would have to be a big cut in acreage, and which I could see happening. I mean, yes, the trade estimates are going to be right in line with March, but obviously this one will surprise a lot of people. This June acreage report, it's often 3 or 4 million acres off, and that's a big deal, Michelle. All year long we talk about yield. You and I just talked about the yield in Illinois, but what if you take 3 million acres off of corn? Well, that takes bushels right off the top and off the ending stock right away. 3 million would be a big deal. I don't know if that happens, but that's what it's going to take, because I don't think the quarterly stocks report is going to be a huge surprise. We know we're lower year over year, but we also know export demand's been a drag. So I don't think that's going to get the bulls going. It would have to be some sort of big acreage decrease to get the bulls excited again.
Yeah. So a little pop here this morning in the grains, as you said, we got overdone. We've hit 50% retracements, maybe seeing a bounce because of that. But we also had the Drought Monitor out this morning. 70% of corn acres now are in D1 to D4. We've also got, an increasing amount of soybean acres. We were up another 6% on the Drought Monitor to, let's see, where is my number? 63%. So drought is expanding, not declining. And so is the market going to take note of that?
They'll take notice of it. It'll maybe help. It'll lead the story of why we're rebounding a little bit this morning. But I think the futures market, and I mentioned futures market for a reason, is we're always trading what's going to happen next. You know, the drought monitor is very much a past, and so was the crop conditions report. You know, last week we didn't have rains, and it started to rain this weekend in the Dakotas, and in Iowa got some surprising shots. So I think the futures market is going to quickly change to seeing this forecasted rains for really the driest areas of the Midwest the next 5 days, getting hopefully 1 to 3 inches of rain. And I think the pop is going to be very short-lived, and we go back to trading the forecast and assuming that these drought conditions eventually get better. They're not going to go away anytime soon. We've been just too dry this spring, but I think them trending in the right direction as far as crop production will make the funds probably flip from these longs probably back short again.
Yeah. And to your point, even if we get a decrease in yield, you've been in the camp where you think that the demand has been sluggish enough that we're going to have pretty good yield cuts to overcome that. And the export report this morning would kind of bear that out, right?
Yeah, exactly. Just horrible export demand. And I underestimated that this winter. I mean, I kept thinking we'll have a nice spring rally like we normally do, tight old crop supplies, thought we could get a bigger pop, but also didn't anticipate Brazil having the record soybean crop and record corn crop they have coming. And really, Michelle, before we started this weather market rally in corn, we were the highest priced corn in the world. So with the market going higher, all we're going to do is export less and less. So say we're right and the Illinois crop has had some damage and it's irreversible, I think USDA can cut anywhere between 100 and 300 million bushels off of new crop export demand. So therefore, losing 20 or 30 bushels an acre off the Illinois crop and then having an average crop everywhere else actually didn't matter. I hate to be the bearer of bad news, but that's just my thoughts here. I think we're in a time frame for the corn market where we're going to have to spend the next 2 years maybe at lower prices so we can find more export demand. We have to basically get low enough to compete with Brazil or win out China's demand from Brazil. And that's a sharply lower price, I'm afraid.
Okay, cattle market has started to soften up just a little bit since you and I started talking here, and obviously a little higher corn market might be part of that. And really the pullback in corn has been part of the reason that we've had a pretty darn good week here in the cattle market so far. So what's your thoughts? That's been in light of lower cash and cutout values. So is this market going to be able to go back up, or are we just kind of going to move sideways for a while?
I'm going to kind of say sideways at best. I've been happy and impressed with the recovery in the cattle market. It was probably mostly led by just a sharply lower corn market leads to a sharply higher feeder cattle market, which, drug the live cattle up as well. But I'm a little concerned with the box beef going lower. Cash, so far what we've seen this week is a little bit lower. I think there's a trend developing here, and that hole in production that got us this big rally is probably filling. The feedlots are still very current, which is great, but slaughter has been increasing. Slaughter never really did dip that much, and not as much as I thought it was going to. So it's all on demand now, and that makes me just a little bit nervous. And the bigger thing is I think feedlots are going to lose control here, Michelle, moving forward. Not control, but just they won't have as much bargaining power as they did the past couple weeks. And that means the packers have more control. And they're pretty good at pushing the cash market lower when they have more control. So I'm worried live cattle are going to start trending lower a little bit.
Well, seasonally, we're past our biggest demand time period. So that certainly speaks to what you just said. Hog market, we have had this huge rally off the lows. Is it about ready to come to an end? And what are you thinking we're going to see in terms of the liquidation in the hogs and pigs report today?
Yeah, that hog market is so confusing and hard for me to grasp with this Prop 12 going on with California, right? Are they just trying to buy up, meat now before that takes an effect? Probably. But then I'm also looking back and assuming we had a lot of hog liquidation back this spring when corn prices were high and profits were very low. So I think there's probably a bigger story of hog liquidation going on. That's the more bullish story, which is probably more for, less this fall and next year. The whole California thing, I don't know what to make of that, to be honest. But nice pop, probably sideways from here is the best projection for me.
All right. Thanks very much for joining us. Wayne Bussey with Bull Marketing, and that's Markets Now.